When you take a look at the downside for Chinese growth as we get into GDP day, how much of that is coming through from the risks in the property sector, and how much risk do you assign to the spread of Omicron, which we know now has hit the capital cities?
Yeah, well, what we are seeing is that we do have some slowdown, which is related to the policy response and to Omicron spreading to a larger number of cities. So the zero COVID policy is having some economic impact, and especially on the supply side. And on top of that, you have some underlying weakness and some underlying slowdown. And we think that well, we could see at some stage during the first half of this year some bottoming in the slowdown, and the BOC and the fiscal policy stepping up and to loosen further policy.
So we've seen one of the popular takes, one of the popular positions going into the start of the new year has been a big recovery seen in Chinese equities. Are you on board with that? How selective would you be in terms of looking at the sectors that could see that rebound?
We start the year on overweight policy on China equity, and trying to understand the reason for the bear market last year. I think the most important the contribution to the decline has been first and foremost in the internet and in the regulatory tightening that we've seen. And today in that field, what we do see is number one valuation, which is at very low level today, a positioning which has become very, very much underweight, and we still have a negative news flow on the tightening of the regulation, but there has been at least some stabilization, and especially on some clarification of the legal status of the so-called variable interest entities. So this is one part of the market where we think that the worst is behind us.
We have seen...
and maybe just
Go ahead, finish your thought.
Yeah, the other subject is more on the onshore market. We've seen massive dispersion last year in return, and we think that this year is going to be probably a little bit less favorable, at least on the tactical way, for the highly valued stocks. So think of the green transition stock, for instance. Yeah, but on the expanding to more common prosperity theme on some consumer name, theme on some advanced manufacturing names. This is where we see some interesting theme on the Chinese market.
Yeah, as you mentioned, common prosperity, it reminds me that we also have the new capitalism drive by Prime Minister Fumio Kishida over in Japan, right? We have seen some volatility with comments that he's made in the past with capital gains taxes and so forth. What are you looking at over in the country?
Well, we look at least two dimensions in the country. And the first is the global macro backdrop, where we have a yen which is undervalued. We have S&P which is relatively resilient on the back of rising yields, which historically has been a rather good environment for the Japanese equity. And we could expect, with the earnings season starting, to see the bond that we had in the third quarter to be confirmed, especially in a number of exporters. Think of the automobile sector. Now, having said that, looking at the domestic catalyst, here the picture is less favorable, and you were mentioning this new style of capitalism, some tax incentive to boost wages. It's maybe still too early. Let's see after the upper house election in July what we could get. Yeah. But I would not play the market now on this. And then you also have in Japan the green transition. You could have at some stage some hope of a green-led capex.
Okay.
But again, we are now a little bit early in this stage.